All right, what is up, traders? What's up, tycoons? Super excited for today's video. It's going to be the first in a series of market breadth instruments and measurements that I like to use to, peel back underneath the hood of the market and look for any signals on whether a trend has strength behind it, whether there's any divergences to indicate a change of trend, as well as many other things. Okay, and so the first one we're going to be looking at here is going to be the highs and lows. All right, so that's what we have on the top, and then we have the S&P 500. Now, what I have noted here with the vertical lines and the red and green lines here are going to be divergences. We'll explain what those are. And we'll also explain further, basically, the simple concept of, measuring 52-week highs versus 52-week lows. We'll give a quick breakdown of what that is in today's video. And as always, the content on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. I do want to mention that this is one of the flexible grids available to members of the Investment Intelligence Discord. Okay. You can see the list of flexible grids here. There's many, there's over 30 of them. And these are all things that I use to measure the market. And I've done the hard work of already charting them and setting them up. And so, members can get access to all of these flexible grids, as well as different scans, indicators, scripts, that I have in Thinkorswim. These are, just one of the benefits to being in the Investment Intelligence Discord. Today is the last sale, last day of the Black Friday sale. So you can get in for just $1 right now, where you get access to all of those flexible grids, resources, but also the different analysis and trade ideas. Carnival Cruise Line was a really great one. There's been many other great plays inside of the Discord as well. And you can get in for just simply $1 right now using that promo code Black Friday. Otherwise, I started a completely free newsletter called Investment Intelligence, giving out free valuable finance content, trading content, and free trade ideas. I try to sprinkle in 1 to 2 free trade ideas a week. And these are what the trade ideas will look like, highlighting the chart conditions, showing you guys the chart. And I try to put really high quality setups in the newsletter, and most of those newsletter trades have played out very, very nicely. This is an example of, the conditions we're looking at on SWK, rising wedge, and that rising wedge played out perfectly, came down to the targets we we're looking for. So if you're fans of free, valuable, content, free trade ideas, and you want to get those trades to your inbox, sign up for the newsletter, or for right now, you can get into the Discord for just $1 using that promo code of Black Friday. Now, let's talk about this. And so what is a divergence, right? You may have heard me say that in the beginning, and you may not be familiar with the term. Well, we have our 52-week highs and lows right here, and we can see that this is making lower lows, right? So a very simple concept you want to start understanding when it comes to analyzing the markets and stocks is, we have a low here, right? We have a lower low, and we have a lower low. So we're making lower lows here, but meanwhile, the S&P 500 is making a low, it's making a higher low, and it's making a higher low. So this is a divergence in this case, where the S&P 500 is making these higher lows, but the percentage of stocks making, 52 weeks highs versus lows is actually trending lower. So in this case, using this indicator, this would be a bearish divergence, right? And be an indicator that, hey, maybe the stock market is due for a pullback, right? And you can see what happens. Market ends up pulling back. In the next instance we have is actually going to be a bullish divergence. In this case, where we're making a low and then a higher low right here, right? So we're making higher lows on, our indicator up top, and the stock market is making a low and a lower low. So this is an indicator we could be due for some type of a rally. And sure enough, the market ends up rallying afterwards. Now here we have this period here with the low and a higher low, and then here we have a low and a lower low. Again, now we have a positive divergence on our indicator, and what happens? Well, the market starts to rally. Same thing over here, we're making a low and then a lower low, right? And here we're making a low and then we're making a higher low. And you can see that the stock market did actually pull back a little bit. So this is a great example of not every indicator, not everything is going to work 100% of the time. But, when you start to look at these different instruments, they will, help to give you an edge in the market, right? And so that's what we're doing here, okay? Nothing is really ever going to work 100% of the time, but this is one instrument that I really like to use to help give me an edge and peel back underneath the hood of the market and take a look at some of the market breadth and market internals. Okay, there's many others, and this is just one, but this is definitely one that I like to look at for instances and cases of these divergences. Now, if we dive a little bit deeper into traditionally how it's used, the symbol is used to track the difference between the number of stocks reaching new 52-week highs and the number of stocks hitting new 52-week lows on the New York Stock Exchange. So the NYG HDH, all right, that basically represents the number of stocks that have reached new 52-week highs. A 52-week high is the highest price at which a stock has traded during the previous year. Okay, 52 weeks in a year. That's why people talk about 52-week highs. It's basically, the high within the last year. And then NY low, all right, is going to indicate the number of stocks on the New York Stock Exchange that have hit a new 52-week low. 52-week low is the lowest price at which a stock is trading during the previous year. So whenever you do basically 52-week highs minus 52-week lows, this shows the net difference between those two numbers. Now, it's used by traders and investors to gauge the overall sentiment in the stock market. So, for example, a positive value means more new highs than lows might indicate a bullish market sentiment, and a negative value with more new lows than highs might suggest bearish market sentiment. So you can see we are above zero here, and we're in that positive market sentiment territory right here, right? And when we're below, you see that the stock market is dropping. We're below here and the stock market is dropping. We're above over here and the stock market is rising. So it is a very simple instrument to use. And this kind of info is often used in market breadth analysis, which helps investors understand the extent of participation in a market move, whether it's up or down. So if a large number of stocks are participating in a market trend, right, it can be seen as a sign of strength for that trend. Now, conversely, if only a few stocks are driving the market trend, it might suggest that the trend is weaker and could be nearing a reversal. So this is much more of how the traditional person uses it. But as I highlighted in this video, oftentimes I like to look for divergences, okay, where, the stock market is doing one thing, but the difference between 52-week highs and lows is doing something else, right, is doing something different. And that's something that I tend to look for, and I think can be very useful and something that you want to add to your weapons. Okay, remember, trading and investing, it's really like going to battle. It's really like going to war, right? And so you want to have the best weapons available. You want to have as many of those weapons available, and you need to know how to properly use those weapons to give yourself better success on the battlefield and in the on the war ground, right? So this is something that I just wanted to give a quick explanation for, a tutorial on how I use it. Okay, and don't forget that this is available to all members of the Discord, right? So you can join right now, depending on the time of you're watching. The promo code Black Friday may be expired, but if you're watching it today, you can get in for just a simple $1. That's where you get not only this script, okay, and you can get this flexible grid and just import it right into your Thinkorswim, right? But you can also get access to the many different flexible grids, the different custom indicators and scripts we have, as well as all of the different trade ideas and analysis that comes within it. Right. And if you don't want to join the Discord, you can always just sign up for that free newsletter. It's completely free to you guys. And if you enjoy valuable content and, free trade ideas, you'll definitely love the newsletter. Thank you guys for watching, and I'll see you in the next one.